webinar today, Succession Planning 101, How to Retire as an Independent Insurance Agent. My name is Allison Baberl, and I'm the Marketing Content Specialist here at Agency Block, an agency management system designed specifically for the life and health insurance industry. Today, I'm joined with my friend, John Hockaday. John is the COO and Principal of New Horizons Insurance Marketing, an FMO based in Decatur, Illinois. John will be sharing with you his tips and tricks he's picked up along the way about preparing your book of business for your eventual retirement. Please ask questions throughout the presentation via the Q&A window. This window is located in either the top left-hand corner of your screen or in the bottom middle. All right, John, let's get started. It's all yours.
Thank you. Thank you, Allison, and thank you, everybody, for listening in. I'm John, and looking forward to spend a little time here together with you. I'm looking here at our first bullet. That's not right. Insurance business in 1979. And Allison was telling me here just a little bit ago that there's somebody listening in that maybe has me beat. So good for you. It's not a contest. But I don't know where the 40 years has gone, but it's gone. Been a great ride, and we're still riding. So with this next thing, New Horizons and Sam's Hockaday, those are our two businesses. So just a little bit about that, just to kind of get us all on the same page here. Sam's Hockaday and Associates is a career business, captive career senior business, that Jeff Sams, he's my business partner. Jeff and I have been in business since 1981. I think that's where that bullet came from. So we've been partners since 1981, and we started Sam's Hockaday in the mid-'80s, 85 or 86. We still have it. It's still here in our building here. Some of those agents, I've got one agent that's been with us since 1985. So a long, long time. Some of them have been with us. And that business is still going great. Then in the kind of early 90s, it spun into a FMO wholesaling business, and we named it New Horizons Insurance Marketing. It was just kind of a natural outflow. We had an agency that was doing good, and we'd made a lot of relationships in the senior market with carriers. And so just kind of like one step led to the other. And in the last 20 plus years, 25 years or so, most of our time has been spent on the New Horizons side and working with agents and agencies that are out there in the senior market. So that's a little bit about us. Succession Planning 101, if I could have something more basic than 101, that's what I would put up there. Man, I am for sure not an expert in succession planning, but I'll tell you what I feel like we can talk about today. In the last 8 months, we have bought two agencies. So I'm going to talk a little bit about that and how that played out. Jeff and I are we're both 58 right now. We're going to be 59 pretty quick. So we're the same age. We're both going to be 59. Both of our boys are in the business with us. And we're in the middle of trying to figure out our own succession plan. We really want to, our first choice would be to pass it on to the boys and everybody that works here to continue on down the road when we're ready to retire. So I'm going to talk a little bit about that. And then we've also have two other agencies that's kind of in the loop right now that we've met with, and that most likely I think will end up getting a hold of them too, probably in the next 4 or 5 months. So anyway, here we go. Let's see how this goes. I've got if I had to give you guys a question of the day, I'd say, what's your plan? Or what's our plan? And I don't know if you're like me, but just the word plan almost strikes terror to my heart. I'm a terrible planner. It just does not come easy for me at all. I feel like I'm a salesman at heart. You know, that's really where my strengths are, I think. But planning is for sure not one of them. But this is about succession planning, and I think that's the important word there, is that you've got to buckle down and decide that you're going to make a plan. Okay? I've got a little quote for the day too. So we got a question of the day and the quote of the day. The quote of the day is this. I don't think it's original with me. Is a good plan today is better than a perfect plan tomorrow. And I think there's a lot of wisdom in that. I think so many things in life, we think that we have to be an expert at it, or we have to have all the things figured out before we take the next step. And you know what ends up happening is we don't take that next step. So my hope for all of you guys today, if you're kind of in that time in your life where you're beginning to think about this process, that you begin taking the steps, whatever that is for you, to make this happen. Okay? Me included. So next slide, Jason, please. Okay, so what we're going to talk about, I guess I skipped it. We got 3 options that I thought we'd focus on. The first one is if you are fortunate enough to have kids in the business, or maybe it's family, or maybe it's really a close association, but your dream or your goal would be to move this business on down to either your kids or somebody that's really close to you, somebody that's in your organization. Okay, we're going to talk about that. That would kind of apply to me. The other one, which I think that one's a hard one. The other one I think is easier is if you're an agent that's built up a beautiful business like so many of our agents do out there, and it's your time in your life where you're ready to move on, or you think it's time to take the next step and you want to retire or do something different in your career, that you just want to sell out. We're going to talk about that. That would be like the 2 that we just did in the last few months. And then the third one is the one that I think is the worst, but it's the one that so many people do, and they just don't do anything. And I just call that fizzle out. And a lot of guys will do that. You know, they're in the business, senior market specific. They've had a wonderful run, a wonderful career. Maybe they've got some age on them now, and they've kind of lost the passion for it. And yet they haven't made any kind of a plan, and maybe their health has gotten poor, and they're just kind of riding the business down. We're going to talk about that one too. So let's go with the first one, pass it on to your kids. Here's just a few thoughts. I don't have anything to back up why it only works for 10% of agents, but I think that's probably right. You know, it just makes common sense that some of us don't have kids, or if we have kids, none of our kids are in the business, or maybe even if they're in our business, they really just don't have the personality trait that they want to take over mom or dad's business. Okay? Next bullet's kind of on the same thing. Are they in business or not right now? I think that's imperative, that if it is going to work out where you're moving it on to your kids, that they're in the business, they're earning their stripes, they're paying their dues, they're learning it from the inside out. So that's another consideration. And then this last little bullet here is a consideration for us as the owners, is most of the time, if this is the route that you're going, you have to be good with that you're going to be the bank. In other words, this sell to your family or to your child, he's not going to be able to write you a check for that business, most likely. So you both have got to be on the same page how it's going to go, and you're going to have to be the one that sponsors him or finances this for the length of the sale. Just talking about Jeff and I specifically, kind of a little snapshot of us is we both have our boys in the business here. Jeff's son, Michael, has been with us 12 years and is doing a fantastic job. He runs our career side now. He is a outstanding producer. I mean, really one of the best producers we have in all of our organization. So he's a terrific producer, and he's a terrific trainer. Those are really his 2 gifts, I would say, his skill set. My son, Luke, has been in it now 7 or 8 years. Luke also has his own book of business, is a great salesperson. And Luke's skill set is he is an includer. So he really relates well to the agents. They can tell that he's been in the field, and they both bring different skill sets to the table. So just those two things right there, we feel like we have a really good chance to succeed in this by passing it on to our kids, because they've both been in this business a long time. They're very, very good friends, and they kind of bring different skill sets to the table. Here's what we've done so far, guys. We have had our business evaluated by an outside firm. Now, this probably isn't necessary for everybody, but since we're an FMO, maybe a little bit larger organization than some of you out there, is we went to a local guy. He was a local guy, but he's known in our area here in Central Illinois as being really the go-to person to health and succession plans, and he's already done the evaluation on our book, or on our businesses. We've got an appointment with him, the four of us, to sit down this coming Tuesday to begin that process. Well, I'm kind of maybe giving you more than what you need right here, but I guess the point I'm trying to make is that we felt this is such an important decision, and it's a big decision for all of us. We need somebody almost as a mediator. Not that I think that we're going to fight or anything like that, but we want to be so fair to our kids and generous. But at the same time, we want to make sure that Jeff and I are protected. You know, I think there's maybe two extremes and then one in the middle when you're talking about a family passing on the business to the other. You have some that are maybe clear to the left that say, hey, I'm just giving this business to my kids. We're certainly not doing that. And then you have the other side, clear to the other end of the spectrum, where you might say, the owner might say, you know what, I've had this valuated. I know what I can get for it out on the open market. And if my kids are going to get it, they're going to have to pay the exact same price the best price I can get anywhere. We're not going to do that either. We're going to fall somewhere in the middle, but we all need counsel on this for us to move forward. So I would say when it comes to passing on to your kids, it really, really is a smart idea to sit down with somebody that really understands that side of the business, understands succession. Probably it's going to be an accountant. You're probably going to need an attorney involved too, but let them help you in this process. I think there's a lot of wisdom there. Another little example here, this has happened here just in the last 60 days. I'm not using any names here, but these are all real life people. I've got a really sweet agent in Indiana who's been doing business with us for years and years. She has a daughter that lives in her little town, and she also has a granddaughter that lives in that same town. And it would be this agent's dream for her daughter, her granddaughter, to take over her book of business. It's what she wants. And you know what? She called me back here. It's probably been 60 days ago. They came over, the three of them, spent a day with us because we're their FMO, and they want to, you know, she wants her kids to continue on with us, and that's sweet. But just saying, John, how do we do this? And so some of the things that she's up against, they're all for it, but they're not even in the business yet. They both have great careers. They're both successful. They both want to do it, and they are taking the steps. They both gotten licensed now, the daughter and the granddaughter. But you can see it's still a long way from happening, and nobody's in any hurry. But these things take time. They just do not happen overnight. So my hat's off to them. They're taking the steps necessary. I got a note from them, kind of funny, from the granddaughter, real nice note, thanking us for spending the time with them, and said, hey, if you had one comment to make on us, on what my biggest concern was, or what their biggest concern will be about doing all this, or what's going to be their biggest hurdle, I guess was the way that she framed it. And what I said was, it's your fear. It's your fear. They are both so bright, and their grandma has built such a beautiful business. It's going to work, But like so many things in life, we don't do it. We don't take the next step. We don't start the plan because we're afraid. So my hat's off to them. They're taking the steps. It's still quite a ways from happening, but I'm betting it's gonna work. That's pass it on to your kids. Number two, let's just talk about this one, selling your book. We've just done 2 of these in the last few months. The first one that we did is with an agent in northern Indiana, been with us for a long time, probably 15 years. I got a really tough phone call from him last May, a year ago May, so it would be May 17. And he said, John, he goes, I just got terrible news. I've got terminal cancer. I know I don't have that long to live. They gave him 24 months at that time. And he said, would you guys consider buying my book for me? And we said, absolutely. We'd never done it before. So that was really our first go at this. And he lives 4 hours away from our office here. We spent a lot of time sitting down with him and just kind of figuring this out, how we're going to do it. But thankfully, we did it. January 1 is when the whole deal consummated. We paid him cash for his book. I'm going to talk a little bit more about that in detail later. And then he passed away. I thought it was in February, but it wasn't. It was at the beginning of March is when he passed away. So it was the truth. Well, he was only 57 years old, too, really a young man. But the point is, that was a thing that sprung him forward. Obviously, it was critical that he had to make a plan. He had to get busy on this and figure something out for his book. So thankfully that worked out. The valuation, I'm going to talk about that in a little bit later here. You know, I think if I'm you guys and I've got a book of business that maybe represents most of my life's work, these are customers that are not just customers, but they're really deep friendships. Probably a lot of you can say, hey, I've written this lady, but I also had their mom and dad. And maybe if you're old like me, you might have even had their grandma or grandpa. That's how crazy it can be. But the point is that you care. And you want to get the best deal, obviously, the best valuation you can for your business, and you should. But just right alongside of that, equally as important, is that whoever takes over this, you trust. And you know that they're going to care for your customers. And that when you meet your customer at church or at the grocery store, at the movies or at the bar, or wherever it is, that they are not saying, my gosh, Jack, who are these guys you turned your business over to? You know, it can't happen. You care. So trusting who you do business with, to me, when it's that kind of a business, and I think most of you that you would relate to that, it's just almost as important. Physical location. This is important to you and it's important to the buyer, is what does your business model look like? So for example, let's say you live in a small town and you have an office there. Maybe it's in your home, or maybe it's on the square or wherever it is, but you have a physical location and your customers have been conditioned and trained over the years. When they need something, they just go to your office. Well, if that's your setup, most likely that's going to need to be your setup going forward. So you're probably going to need to sell to somebody local that's going to be able to continue that on, okay? The one that we bought, that the gentleman passed away, we are doing it all from here. So we were able to reach out to his customers, communicate everything to them, and really it has worked out beautifully. We didn't really know what we were getting into, but honestly, we have not lost any customers. And that is a true statement. I'm not just making that up. It was a small book. He had 269 customers, and every one of those customers have stuck with us so far. So we're really, really thankful for that. But he didn't have a shop somewhere where they were used to going somewhere. So you need to take that into consideration if you're selling your book. If your business looks like that, not that it can't be done, but if I was buying your business, or we were here and that's kind of your setup, I would be thinking, well, I'm gonna have to have a physical presence there too. I'm going to need to make sure that I have hired an employee there too, or have an agent there too. It's going to need to look the same if your people are so used to that. I think most of the time that's going to be true. Okay, which is an added expense for the buyer, and all that stuff is going to have to be taken into consideration. Okay, next slide here, guys. I got this at the top, talk to your FMO, and I think that's really, really important. If you're dealing with an FMO right now, you're in the senior market, and let's say you've got somebody you've been working with for a long time, and you like them, you trust them, they've delivered for you over the years, I think that is the first place, if I'm you, that's the first place I'm going to go, is I'm going to go to my guy who's in that role right now and ask him, like John asked me, hey, would you be interested in buying my book? He may not. He may not have even thought of it before. I don't know. I don't know what the setup is, but that's where I would start, and for two main reasons. Number one is, and this is probably the biggest one, is you guys should already trust each other. And you've already solved that piece of it, that you know this guy's an honest guy, and you know that he's going to do what he says he's going to do. And if he says he's going to do it and take care of your customers, you believe he's going to find a way to do it. So that's number one. I think that alleviates a ton of the worry and the whole process. The second piece is a money piece, is he's already making money on your book, right? So whenever you sell a MedSup or a cancer policy or a life policy or whatever, annuity, whatever it is, doesn't matter, MA, that's how we make money on our side of the fence, is when an agent out there writes a piece of business, MedSup will say, and you make your comp, we make a little sliver on top of that. So I can afford to give you a stronger, higher valuation because I'm making a little money on your book, right? And I want to keep it. You send it to another FMO, I might end up losing it. So I don't want that to happen. So that is really, really important. The other thing to consider too is we already have relationships with all those carriers. So if you're writing with us with Aetna and Mutual and Cigna and whoever it is, doesn't matter. We're already in the loop with that carrier too. It's easier for us. It just makes a lot of sense. So I think the most natural place to start, if you're unsure of where to start, is run your FMO and say, hey, I'm thinking about doing this. It didn't happen right now. It might be in a year or two, 3 or 4, but I'm just letting you know it's coming. And when it does, is this something you would consider, or do I need to be looking other places? You know, maybe I need to be looking locally, or I need to look someplace else. All righty. Okay, I'm done well, I've got a little case study here, but I get so windy on this, I'm just going to skip that one. Let's just go on. Okay, how is a book generally valued? Well, the two that we bought so far, we pay a multiple, and the multiple that we paid, I'll just tell you, is 2 times. We paid 2 times commissions. And we were pretty simple and straightforward on it. We evaluated the book. I mean, we knew who the customers were and all that stuff and where they were and what year they were in. Like, did you just write this person last year, or are they in their 5th or 6th year of a MedSup effective date and anniversary date? Does that make sense? Because, you know, in most states, MedSup, the comp drops off after 6 years if you don't rewrite it and restart it again. We didn't really take any of that into consideration. We just came in and said, okay, we know this guy, we know what kind of person he was, we know the relationship he had with his customers, he was already with us, so we paid him 2 times his book up front. So it wasn't overtime, and he needed it up front. The other one that we bought, we also used 2 times as a multiplier, and Diane was a career agent of ours here. She'd worked with us for 23 years, 69, she wanted to retire. We felt like the right thing to do was to buy her book that she built here underneath of us or with us. And so we're buying that back from her. We're paying her 2 times over 4 years. Okay? So where am I going with all this? I've already told you why FMOs can pay more. Oh, so how's a book generally valued? It's a multiplier. So I'm going to touch on it a little bit more. I think that's pretty common knowledge. I would say maybe the industry average is 1.5 or a little greater than 1.5. But I'm not even saying 2 necessarily has to be the top. It could be 2.25 or 2.5. I think it could be that in some instances. It depends on how you need the money. If you need the money up front and we're writing a contract that we're paying you that 2 times, no matter if everybody quits us right now, we're still obligated to pay you that 2 times. Or if you say, I don't need the money up front, I don't want the money up front, I don't want a big check right now in 1 year where I'm going to be tax heavy on it. I'd rather see it spread out over 4 or 5 or 6 years or something like that. Then we can afford to pay a little more multiplier. Okay, I hope that helps. All right, importance of a CRM. Guys, this is important. And this is kind of a plug for Agency Block too. We use Agency Block, and we've used Agency Block for probably 5 years now. And great people to work with here right in the Midwest with us. I feel like their values are the same of ours. But it's amazing, I think, in the senior market especially, how many guys and gals, but guys I'm saying, that have been in business for a long time, 25, 30 years, and they still don't have their business digitalized. And I know it's a pain, and I know it's a hurdle to get over, but I can't encourage you enough. I think it will increase the value of your business, because if it's not, and this gentleman that we bought, his wasn't. So what's the first thing that we have to do? The first thing we had to do before we even, did the deal January 1, we had to bring all of his files over here and digitalize his whole book of business, because what do we have to do as the buyer? Well, just think about it. We have to make an announcement to your customers that John is retiring, we're taking over, we're really happy about it. We got to be able to communicate a lot to those customers, especially early, especially in the first 6 months, because this is a big change for them. What we can't have happen or don't want to happen is they hear, oh my gosh, John's retiring. I don't know who these new guys are. I haven't heard from them. I'm looking around. We can't have that. We're already paying for that. So we got to make sure that we catch up to your 20 or 30 years of knowing and caring for these people and communicating with these. We got to do that fast. We got to be able to reach out to those people fast and effectively and consistently. And the only way we can do that is if our business is digitalized and if it's in a CRM. So if you already bite the bullet, it's going to help you. If you say, there's no way I want to do that, I get it. I might be the same way. But either way, it's going to have to be done. It's going to have to be done, especially if it's a business that's going to be serviced remotely, like we would prefer to do. Okay, I think we've already covered that other thing. Customers use their agents. Okay, get the most for your book. How do I get the most for my book? Well, just think about this for a second. If you're selling your house, what do you do? Do you just do nothing and you just put a sign in your yard? No. Before you sell that house, I bet you do all the things that you should have been doing the last 3 or 4 years, right? You're making it nice for the next guy. But maybe you need to paint it. Maybe you need to change the carpet. Maybe there's some repairs that you want this house to be the best looking house it can possibly be. That way you're going to get the most money for your house. It's the same way with your book, guys. It's the same way. If you've got customers that you know need to be updated, you should update them before you sell, right? If you're a med-sup person, which or a senior person, which I think probably a lot of you are, that customer needs to be brought up to speed, because I much rather, as a buyer, want a customer that's just bought a plan, is in their first year, and I know I can count on some revenue coming from that for a while, rather than I get one that's in the 6th year, and I know I got to scamper and see if I can reposition that customer, right? It just makes sense. Same way with the CRM. So to get the most for your book, dress it up. Do the things that you know you need to do. What we're going to use as a valuation to come up with a multiplier is probably going to be your 1099s. That's what we've done on the 2 that we've bought, is we're looking at what your income was for the last 3 years, and on both of them, what we used was their last year's income as the multiplier. So you want this last year's income for you to be as big as it can be. That's going to help your valuation. Okay, I think I've covered all of that so far. I will say this, it's in bold down there, but I'll just say it. We really like this business and this acquisition business, and not that we can do just tons and tons of them. I think we'll be doing 2 more here in the pretty near future. But if you know that your FMO is not an option and you'd like to visit with us about it, I mean, even if it's just visiting, you know you don't want to do anything with us, I don't care. We'll help you any way that we can and share anything that we've got. So just keep that in mind. But we'll raise our hand right now and say we're interested. Okay, next slide, please. Okay, last one. Let it fizzle. This is the one. It's crazy, but obviously you can't recommend it. But this is just what an awful lot of people do, and is just not do anything. And what happens to your customer? Let's look at this. What happens to your customers if they say, you know, I haven't seen Bill in a couple of years. I know maybe his health isn't as good as it used to be. So-and-so said at the post office the other day, I'm not even sure if he's in the business anymore. When you're not communicating like you always have with your customers, when you're not reaching out and touching them like you once did, your customers don't want to leave you. They don't. They care about you like you care about them, but they're getting put in a position where they're getting almost forced to look around. Does that make sense? What happens if you pass away? You know, which we're all going to do, but a lot of us guys in this business are getting older. Me one of them. 60s, 70s, 80s. One of these guys that we're really interested in his book, he's 88 and he still works. He's 88 and they do a lot of business. But what happens if you die and you haven't made a plan yet? You're just going. It is a fire sale, guys. So anybody in your local area, anyone in your region, anyone in your town or neighboring towns, they're going to be reaching out to your book, to your customers. And the obvious is, Joe's not here anymore. I'd love to audition for the job. I'd love to apply to be your agent. I'd love to take care of you going forward and your family and your friends. And it rolls out in a hurry. All right, we're going to wrap up. How do we pay? I think I touched on that already. If we pay a one check or a buyer, not just us, but pays it all up front, your multiplier is going to be lower, and it should be, because they have all the risk. I, as a buyer, have all the risk, and I've given you all the money up front. The second one is probably the most common, where you say, I don't need all this money up front. I'd rather have it spread out over time. That's really better for both of us. I don't have near as much risk. I don't have to put a big downstroke, and I can pay it out over time too to you, but it's still a guarantee. We still decide up front what that amount is going to be, and it's like a pension. You can know exactly what you're going to get. And then the last one, and the one that's the best for me and probably not the best for you, is we pay it as earned. So I don't really have any risk, and I can afford to pay a much higher multiplier because I'm going to pay you over time just on what comes in the door to me. You got to have a lot of confidence in your buyer in that scenario that he's going to grow your book, right? Which would be, that's what we want to do. But that model right there is probably the best for us. and not the best for you. But those are the three ways you get paid out. Never too early to make a plan, guys. What was the quote? The quote was, a good plan today is better than a perfect plan tomorrow. What should I do first? I don't say call me. I think it's just begin to make that decision that you are going to make a plan and start taking the steps. Thank you so much. I went longer than I was supposed to, but I hope it helps. And if I can answer any questions, or if you want to call me, my number's on there. You call me anytime. And Jeff or I, either one, or any of our people here, will be glad to help any way that we can. All righty? Thanks a bunch.
Thanks, John. That was awesome. And I know I told you about this already, John, but there, we have a commercial for it is a photography place here in town, and they take prints of different photos and transfer them to digital files. And their commercial always says, when you lose a loved one, no one wants to inherit boxes of photos. And I always think of that when we talk about succession planning. And if you're on Excel spreadsheets or paper files, you're going to get less bang for your buck, because no one wants to inherit, stacks upon stacks of files, or even file cabinets,
Yeah.
So I always think of that, but I will cut to the chase. We've got some great questions in here. Kathleen wants you to kind of clarify what you were talking about when you said 2 times your book. Is that annually, monthly, when you're looking at what to pay for a book?
Okay, it's a great question. If it's a residual type product, like a MedSup, most MedSups are going to pay a levelized commission for 6 years in most states. That's the way it works. And then it drops off to nothing, or it drops off to a really low service fee. On a residual type sale like that, where there's subsequent premiums and subsequent commissions, we're going to play a multiple of that. So we, like in the book for our agent in Indiana, we looked at it was primarily a MedSup and a MedAdvantage book. We looked at what his commissions were on those carriers, and we took that times 2 and wrote him a check for that. So if it's something like a life account or an annuity account where maybe there's no trailer on it, there's no subsequent commission, then I think you got to get creative, because there's definitely huge value in that customer. Let's say you wrote an annuity on a guy, $100,000 annuity 2 years ago, and you made the commission. There's no commission in it now, but hopefully 3 years from now, when that thing renews, the new owners have built a relationship and they're ready to go in there and say, hey, that money's coming due, Joe. I got a good place for it. Well, then we have a chance to make another commission on that. I think you can get creative with that kind of stuff, where maybe we do some kind of a split on that business. But on the MedSup business, which is, our primary business, what we paid was 2 times his last year's comp.
That's great.
Okay.
Thanks, John. And Kathleen, let me know if that was enough clarification for you, or if you have any follow-up questions, go ahead and put those in the Q&A. Also, if anyone else has questions, keep them coming in. We got another question. Can you expand on the 1.5 versus 2 versus 1 in this day and age, and in MT, where carriers are canceling plans and pulling out of counties every year? I mean, this has been going on for 4 years in a row now.
Right. Now, you're talking about MA there, I guess, whoever's question that was. And, if it was strictly a Medicare Advantage book, we just would have to look at that a lot closer to how we're going to evaluate that. I'd probably have to get some help from some other guys that are in our business on how to assess that. But that's a good point, because let's just look at it from let's say we did 2 times, like we do on a MedSup book. And then all that business is in one county or a couple of counties, and that carrier terminated, and they're not going to be in there any longer. Well, that's a scary thing for a buyer. So those things would all have to be addressed up front, and really sit down and kind of negotiated through how we're going to handle it. That's why I said in this, you know, when you're putting a deal together like that, trust is just, it's huge. It's huge that who you're doing business with, you trust them. Because as much as you want to cover everything and dot every I and cross every T, there's still things that at the end of the day that aren't going to work out just exactly like you maybe thought that they were, and they need to be, you know, you need to make sure that you trust that guy. So it's a good question, but that would be one you'd have to figure out.
Awesome. And yep, they did clarify. They were meaning MA.
Yeah.
John is asking, oh, another John, there you go. John is wondering, how are the proceeds of the sale for a book of business, how does that work in taxes? Is it considered income, or what are you looking at with that?
No, that is a great question, and I'm looking on the screen here. I know that John. He would ask a good question like that. John, I'm honestly not sure. I'm really not. If it would all be, I'm sure it wouldn't all be counted as ordinary income. Some of it would be capital gains, but how that's all determined, I am really not sure. So I'm sorry, I'm not helping. We can find that out, you know, and I'd be glad to post it back. In fact, you know, I told you we're meeting with this accountant next Tuesday. I'll ask that question and I'll get it back to you guys and throw it out there.
Sure, I'll make note of that for you, John, and
okay, thank you. Don't let me forget, or I will.
I'll pass on John's information over to you. We got another question in, and this is more on the agency block side, and they're asking about a migration into agency block. What does that look like? And the answer is it's going to kind of depend. If you're coming from Excel or paper files, if you can get all of your information into a basic Excel file, you can get your information into agency block. If you're coming off a different system, that's something we're going to have to talk about, and I would really highly encourage you to schedule a demo and talk to our sales reps about that transition, because, you know, every migration is just a little unique. But as for coming from Excel or a paper file, the thing I want to just drive home the most is cleaning your data. Make sure all of your data is in an organized, standard format. That way you can pick up right where you left off. And then when you're selling your data or your book of business, whomever buys it from you can pick up right from where you left off as well, because there's no confusion. Everything's right there. They can find anything they need in an instant, and they can help your customers as soon as possible. That helps with their retention. And depending on what kind of payment plan you've arranged with them, if you're paying based on earned, I mean, you want to make sure your clients are staying around, because that means you're making more. So,
no doubt.
Thank you so much for that question. Kathleen is asking about, isn't acquiring books scary with all the talk of screwing around with Medicare? Kind of how H&R Block is taking a hit right now because of the tax laws.
Kathleen, that's a great question, and I'm scared all the time. So nothing changes there. No, I'm not scared, honestly. I feel like we've got enough under our belt, and I feel like we can service the customers even remotely in today's world with everything that's out there. And I got a lot of confidence in our staff here, how great of a job that they do. I mean, it isn't like I'm going to go out and we're going to buy 10 at a time. We couldn't do it. We couldn't do it even if we wanted to. We wouldn't have the means. But just kind of gradual, planned growth for us, I like it. I really like it. And, you know, I can see us continue to do more until we just get some kind of a red flag that said this particular market that we're so heavy in is really taking a turn. I'm not worried about that. I get worried about other stuff, but not that.
Well, great. Thanks so much for being so frank about that, John. You know, it's hard sometimes to talk about what scares you, and, you know, just being so honest about that, that's fantastic.
Yeah.
But
of Jason too, and he's right in here looking at me.
I know Jason's probably scared as well, but that's all we've got for today. Thanks again, John, for this awesome presentation. I learned a lot. I hope all of you guys learned quite a bit. You have John's contact information. If you have any questions, go ahead and reach out to him. I did drop a link in the chat window for you all. If you want to take a look at Agency Block schedule demo, that's the best way to learn about Agency Block, because you get on with the sales rep. They talk about how it will work with your business, not with the business down your street, just yours. Then you'll see kind of like what a day-to-day would be just for you. So I would really highly recommend that if you want to learn more. And if you want to get more information about migrating from Excel spreadsheets or paper files, check out our website. We have a ton of information on there about migrations, things you should be asking, things you should be looking out for, all of that. And we'll have that in subsequent emails for you. And if you have any questions, just let us know. Otherwise, thanks so much for joining us today. John, you have a great day. All of you guys have a great day. Thanks.
Thank you.